Hey everyone, so welcome back to another Pip Academy video. And in this video, judging by the title of this video, we'll be touching on 10 trading tips. The first 5 trading tips are based from my course, my methods, things I really just think are important. And then the other 5 just refer to any questions people might have been DMing me, or pretty much what people have been DMing me, and just basically what I think about these topics, these type of things, and trying to just give you guys some benefit, some value out of how to look about these, especially because I'm an experienced trader. This would be good for a lot of new traders and things like that. Pretty much see my mentality on trading and how I go about doing things. First of all, trading tip number 1 is to keep things simple. And so I never really find it necessary to add all these different things like the MACD, or what else do we got here? Moving averages are pretty basic, I'm not gonna lie. But like the Bollinger Bands, channels, moving average crossovers, what else is there? The momentum, the MACD, all these things, the stochastic, the zigzag pattern, all these things really, if I go ahead and add a bunch of indicators to my charts, then they're really just going to start looking confusing. Too many reasons to buy with too many reasons to sell. Simple really did it best. Just the basics. Consider only the things that really matter, and from there just add these things up where they count. Keep your things simple, keep your things clean, because if you are overcomplicating the situation, you can just end up being paralyzed and not know how to continue from there to begin with, right? So it's really important that you keep your things simple, right? Don't overcomplicate it. Don't overcomplicate the situation for yourself. Try your best to reduce your odds to like one possibility or 2 possibilities, because just going into the market, you can see like 1,000 different possibilities. But if I just say, you know what, the trend is up, I'm only going to look for buys, that just reduces you to buy only. So your chances of success are a lot better, rather than taking buys and taking sell trades at the same time, because you're unsure of what the price might do. So number 2 is to always backtest your strategy. So that just goes for anytime, whether you pick up a new strategy from someone X, A, B, whatever. If you go ahead and pick up my course strategy, you can pretty much just end up going through and seeing how these strategies will play out. So if I went through and just added these 2 moving averages, for example, you can just see how price reacts to the moving average. Right, this would be a form of back testing. Like if I told you to buy every time the market broke above the moving average, you buy. Every time the market breaks below this moving averages, you sell. This type of thing, like if I were to say that, you would just go back in the past, back test it, figure out how your strategy is actually going to work. Where should your stop losses be? Does this agree with what the person, whoever gave you the strategy, says? And just become familiar and comfortable with the strategy that you're going to pick up, because you never want the strategy to be, you never really want to be caught off guard where the strategy is doing something that you never knew it could do, or you can also get the idea for how you might need to improve. Maybe your strategy doesn't involve stop losses, so the more that you trade this particular strategy, you come to the conclusion that, you know what, I need stop losses, or I need take profits, or I need a lower risk size. Just back test your strategy and have something to work with. Become familiarity, the comfortability, the confidence you get from just knowing how your trading plan works is extremely a benefit. So don't take that for granted. Become familiar. And one thing I do is I repeat things a lot, and that's just because repetition is one of the most powerful things in the world. If you want to be successful in something, you repeat the action over and over. If I want to be like, I don't know, if I want to take the best pictures in the world, I need to spend my time taking pictures so I can improve, pretty much, right? So other than that, tip number 3 is do not revenge trade. So revenge trade just goes into relation with taking any of your losses personally, and that is just really bad off the bat because this is business. None of this stuff is to be taken personal. Anytime you do lose a trade, the average human mind, at least, there's a very good quote that goes along the lines of it's human nature for someone to want to make back what was lost twice as fast. So pretty much you can just see why that is bad off, like, from the beginning, because first of all, you're getting your emotions involved with the money. And I've mentioned this some places prior on my Instagram or like in my courses, that you can't have that relationship between your emotions and your money. That relationship isn't supposed to be there, because in most cases that connection is just going to be dragging you down, because every time you lose money, you're going to just feel the worst, and you're going to just try to make back the money as quick as possible. And that just throws you off your plan. That makes you greedy. That makes you impatient, and it really just puts you at your worst. Desperately trying to make back your losses. Nothing here is personal. You just trade your plan, and if your plan is a profitable one, you will make money in the end. If it's not a profitable plan, you will just lose money in the end. And obviously, risk management goes in to say a lot about this as well. So number 4 is to remember that the markets are always correlated. And this being said, just remember that if the Australian pairs are weak, then the Australian pairs are weak, right? So let's just take some of the US pairs into relationship. So this pair, the Australian US, is declining. Simple enough. Euro USD is declining. Simple enough. Pound USD is declining. Simple enough. New Zealand USD was declining. Simple enough. And then the US CAD had this time where it rose. So this just shows you that the Canadian was previously experiencing some strength, while these other pairs were also displaying the US's strength. And on the opposite side of that, the main pair, like the euro in this case, was weak. The Australian was weak here. The pound was weak here. Right? And then here, this pair was also on its little bullish move. And this pair as well. Consolidating mainly. But pretty much, this is just to remember that the markets are correlated. I'm not going to be selling something that is strong, and I'm not going to be buying something that is weak. All across the board. Very simple in mind. Just keep that in mind when you're doing this. So number 5 is identify the trend. So pretty much, it's better to always grab the trend from the higher time frame, just so you have a more general perspective on how things are going, and simply find out if the market is in one of the 3 trends. Like, the market can only be in one of 3. It can't be an uptrend and downtrend at the same time. They can be in an uptrend and a downtrend based on 2 different time frames. That is true, though. On one time frame, like this weekly, for example, the market is currently in a downtrend, right? So once I know it's in a downtrend, the majority of my trades should be selling, unless I'm buying the short-term trend. And if we go on the daily, we can see reasons to buy, to the resistance, and this is the short-term trend. Let me just remove these moving averages. Right, so pretty much you can see, identify the trend, and when you identify the trend, you could be placing a majority of your trades in this direction. It's pretty much as simple as that as well. Like, the major trend here is down, right? So like I said from the Pip breakdown video before, and I've said in the course videos, I'm still waiting for this price to go down until I get more further market structure to indicate that it would like to go up. Now, touching into the tips that aren't generally mine, but these are ones I just found online. Tip number 6 is don't give up. So it's really true. Like, you can't give up on trading if it's something you want to do. I had a very rough start with trading. I used to fail just a lot. But I made it through that, and all I gotta say is everything seemed to have been worth it. All the times that I lost money, and sometimes it seemed really bad, but just continuing with the process, I realized that it's trial and error, at least in my case, because I am self-taught. I didn't learn from anybody. So pretty much I realized if I'm doing something wrong, I had to be the person to be okay, I need to stop doing this. I had to realize that my ego isn't worth losing all the money. So either I give up my ego and I decide to stay patient. I decide to keep things simple. I decide to backtest. Definitely don't do the revenge trading and just keep a simplistic approach to trading. Then I know that from there, I had the ability to improve, and I seen the improvement, and things just work out. Pretty much, you can't give up if it's something that you want to do. I always take into consideration trading is the only job that is the only job that I know of that's gonna pay you $70,000 a week, right? And other jobs, when I was working at my job, I was making $500, $500 a pay or $400 a pay. Now that just goes to say, I do have a perspective in my mind that as long as I'm making $100 a day or whatever, then I'm actually just feeling pretty good. But that just goes to say you can't give up if you want to work for those days. I've been doing trading for almost a full 5 years now, and I won't lie, I almost gave up a few times, but I stuck with it just because it's either living broke or trying to do Forex and making some money. So honestly, it's worth the potential is there. So just stick with it and don't give up. If you want to succeed, you can't give up. Simple as that. So number 7 is just a little thing I wanted to touch on. So pretty much the way I go about explaining trading, because I know when I started, I thought I just want to make I just want a get rich quick scheme. I just want to make a ton of money real quick, get out, be done. In a way, that is still my goal, but it's just to make my certain amount of money and just be done, move on with trading. When you start trading, I always say it's more about getting the experience. Forget about making money. Forget about everything else in the beginning. Whether how long it's going to take for you, that depends. But it's about getting some experience, getting comfortable with your trading plan, getting comfortable with placing the orders, getting comfortable with your stop losses and your targets getting hit, comfortable with just for how the market moves, right? You need to get some familiarity for your new surroundings and things like that. Secondly, the next main focus is to build your account. So I never advise depositing $1,000 account or a $10,000 account. I always say do $100 account or $200 account and build your way up from there. Because if you're a skilled trader, you should have no problem developing that $100, $200 account to $1,000. And from there, you can just repeat the process over and over again and turn a small amount of money into a large amount of money. And then on top of that, I know with some of my students, I always say start off with a $10 account instead, right? Because you just want to build your experience. And if you do see that you are improving quickly, more better for you, because now you can have some more skill to flip a $10 account to $100 and then pretty much continue the same thing. If you can survive with $10, you must be able to do a lot better with $100. And then thirdly, making money is actually the last thing in trading. Just because if you want to be trading as your full-time job or pretty much if you just want to be trading as your full-time job, to make $1,000 a day or whether, let's say, $1,000 a week, because the majority of people don't make $1,000 a week. That's kind of the last thing on the step. You need the experience, you need the mental confidence, and then you need to build your account. Whether you do at that stage want to deposit a $10,000 account, sure, if you want to do such a thing, go ahead. But I mean, it just seems more logical to deposit a $100 account and grow it to 10,000 rather than depositing 10,000 and still running that risk to lose your 10,000, right? So number 8 on the tip list is timing. So a lot of people ask me about like, oh, how long do I hold my trades for, or how many trades do I expect a day, or whatever. So pretty much when I talk about timing is I never know how long I'll be holding my trades for, straight up. I have no idea for how long I'll be holding them for. I take my profits in 3 conditions. Either I'm comfortable with how much pips or dollars I've made, so I'm like, I'm good, I'll take my profits. Second is if the target is getting hit. Thirdly is if I see the momentum of the market changing, so I might either draw my stop losses to break even, or I'll just exit the position and say, I'll rather just take this, whatever. So those are really the 3 conditions. I never know how long my trades are going to take. Like, let's say, for example, I take this trade here since it just breaks below the support area here, and I set my target for down here and my stop loss at the top. Pretty much, I don't know if the market is going to fall in 1 candle all the way down to the bottom. I don't know if it's going to take 60 candles and close over there. But regardless, my target is still the same place, and it doesn't change until some market structure changes, or something of the sort, something to lead me that price might want to do something different. How many trades am I looking to take a day? I don't know how many trades I'm looking to take a day. I'm just waiting for these setups to actually appear. Right? Once I get my confirmation, and if you want to know what my confirmation is, then you just have to either just get into my course. So if you like want to know more about this, then you should just like hop into my course, and and you can check it out at thepipacademy.com. And then from there you can pretty much just see how I look about finding my entries. And then I'm just taking my entries when they come. I'm not trading them by the London session, the Asian session, or anything of the sort like that. I simply trade when I see my opportunities and give no consideration to timing at all. So I'm just going to touch on these last 2 real quickly. So number 9 is the emotions. Pretty much you need no emotions when you're trading Forex, because in most cases, the sways of the ups and downs really throw people off, and you just don't really need that. You're going to have such a better time managing your emotions if you're trading low risk, so you can place your trade and forget about it and just let it flow towards its target or its stop loss, or you're there to manage your trade as you like. The emotions, stay away from bad emotions, because they would all just lead back to tip number 3, which is revenge trading. And good emotions, you want to stay like with patience, have a lot of confidence and belief in yourself that these things are going to work out. So tip number 10 is consistency. So remember to just stay up to date with your trading plan. Don't stop trading just because you take 1 loss, 2 losses. Remember that trading is a probable thing. It deals with odds and percentages. So just because you lose 1 trade or lose 3 trades doesn't mean that your whole thing doesn't work. So it's important to keep these things in your mind. And over time, these things will just flow towards your trading habits, and they'll just be like first nature. Make sure you rate, comment, and subscribe. And if you want to get into the Telegram group below, just check the description and get into the link. And from there, you can also check out my website at thepipacademy.com and find out more about how I go about trading. Thank you so much. Check you guys in the next video.